So pretty much, Bill, we were talking about the summer trap in July. So tell us more about that.
Okay. So if we look back, going all the way back to 2014, Bitcoin has gone down anywhere from 30 to 60% in June and July. That includes the bull market of 2017, where there was kind of a heave ho from 3,000 to 2,000. All right. Now, there are a couple of reasons to be worried that this pattern will repeat itself this year. Okay. One of them is a possible issue with equities. Equities right now are assuming what's called a V-shaped recovery. That means the economy tanked and then it's going to come right back. Okay, so let me just give you a few facts about equities. One, I live near the city of Houston. Our hospitals are full, and it takes an hour to get an ambulance, and Houston is the third biggest city in the United States. Second fact is that stocks have gone up so much that if you take the number of shares in Microsoft times its price, the value of Microsoft is bigger than the entire U.S. junk bond market. And NASDAQ as a whole is worth more than all of the world's stock markets combined. Now, I know we've all got to kind of go virtual. So there's this time is different thinking in equities.
Right.
And folks, this time is different are the four most dangerous words in the English language, because it's never different. Okay. So if you combine a serious virus issue in the United States combined with misplaced optimism and a bubble in equities, this could have a negative effect on Bitcoin. Okay. Especially given the seasonal problems. So here's what we want to do. I think we're going to see the top 20 market cap in crypto reorganize itself. I think Bitcoin's still going to be number one, but I think these DeFi players can go up as things like Bitcoin Cash go down. Okay, looking at the artificial intelligence models on Token Metrics, I'm not going to bring them all up. Even our pet project, Ethereum, Bitcoin Cash, I mean, the price predictions coming from our models show 30-40% declines. Okay. So we have to get out of the way. You have to hedge yourself, probably using short selling and things like possibly Ethereum and Bitcoin Cash. And just make sure that, if there's a rally in Bitcoin, you can use it as a chance to put on a hedge. And, I'm sure you'd love to be wrong. Go ahead.
Yeah.
Sorry.
Now, good question that kind of segues from that. As we head into possibly the summer trap in July, DeFi and stablecoin lending could be a good hedge, especially if Compound is paying out 18% annually to just lend out stablecoins. Right. So kind of talk about that plus alts as well, how people should play that.
Okay. So here's how I would describe what can go on in bear markets, right? I definitely think capital is going to flow to DeFi. I definitely think you should buy the dip in DeFi from Kava to Compound to Kyber, especially. The thing is, what's the trade location, right? In other words, if everything goes down, people tend to run into something and think that they're safe. And then all of a sudden they realize that there's kind of a big dip. So if there is a big dip in DeFi, I think you pour into that, right? If Bitcoin goes down to 7,000, then you just pour into DeFi. I do think you're going to be safer in DeFi because I think DeFi can come back faster. Why? Because I think crypto is the new collateral, right? Even though there's price fluctuations, and who knows, maybe we get lucky and there is no summer trap, who knows, right? DeFi and crypto is the new collateral. It's the new way to get money. Credit is what I mean. So those are my thoughts there. I don't know if DeFi is going to protect you from a 30% drop in Bitcoin, but I do know that on a drop in overall crypto markets, you want to be grabbing DeFi.
Yeah. Well said, Bill. And curious to hear what our audience thinks. Some people are talking about maybe US debt, how that plays a factor. That comes from Michael on YouTube. So in general, maybe how does the overall economy play a factor? I know we talked about possibly going into, I guess, pandemic 2.0 in a way, right? With other
Right.
businesses having to close again and other regions having to close again. But how do you think the overall economy plays a factor? Because today, I believe American Airlines just put out an announcement saying that they'll be back to full capacity soon, I believe, right? So
Right.
we're kind of getting two contradictory messages from different parts of the economy.
Right. So, okay. So I think everything depends on, kind of how stocks react, right? In other words, if stocks want to ignore bad news, this would not be the first time. They've been ignoring bad news for a while.
Yeah.
Okay. So stocks really have nothing to do with the economy. They have to do with liquidity. Okay. Now, crypto doesn't have the Fed underneath it. So one of the things I think you have to be concerned about when it comes to the economy is the credibility of the dollar. So if there is a regime change coming in the United States in November, then I think the printing presses are going to roll. And I think that is going to wind up in the hands of the people. Okay. In other words, I don't know, a lot of people may not know this, but the emergency $600 a week unemployment, that ran out last week. So put that together with what's going on in the third biggest city in the United States, and it's not a recipe for sound economic activity. It isn't even a recipe for social order, honestly. Mm-hmm. So if the government has to print money in the future and hand it out to people, I think that's the dawn of crypto. And if crypto doesn't go down in July, because we hope it doesn't, even though we've done the numbers, that's why. Okay, because, just because the stock market's up and just because American Airlines is ramping up doesn't mean that the 30 million people who have lost their jobs are all going back to work. Doesn't.
Yeah. Well, I mean, crypto family, July is coming. Hang in there. Don't worry, we have your back. Just make sure you're with us with Token Metrics. Bill will be putting out two, I would say, pretty in-depth custom newsletters each week in July under the Token Metrics Insight. So if you're a customer, make sure you're tuned in on your inbox. Make sure the emails are not going into spam. Make sure everything is on point, because July could be a big month, good or bad, right? So definitely make sure you have the insights with Token Metrics. And if you're watching this on YouTube, Twitter, Periscope, wherever, make sure you also have alerts turned on so that you know when we're live. All right. So Chris, to see what people think, let us know what you think. Do you think we're going into a trap in July? Let us know down in the comments below.